Moody's tells the story of how the appetite for virtual banks accelerated during the COVID-19 pandemic as lockdowns amplified the need for online banking. In 2017, there were about 100 digital challenger banks around the world. They held nearly $161 billion in global banking assets. By 2020, their total assets quadrupled as the number of digital banks rose more than twofold. Today, there are about 250 online banks. Most technically aren't banks since they don't have a banking license. Moody's focuses on the 20 virtual banks that hold a banking license. These 20 licensed banks are among the largest, holding nearly half of all virtual banks' assets in 2020. An explorable tree map compares the assets of the 20 largest virtual banks. Japan's Rakuten is the biggest. Tooltips reveal asset growth before and after COVID-19. Although the universe of digital banks showed rapid growth, their combined assets are still small compared with legacy banks, only 0.4% of the world's banking assets. The 20 largest virtual banks represent an even smaller share. What fueled digital banks' rapid growth during the pandemic? The surge was mostly driven by customers' superior tech and expanded product suites. China's WeBank amassed 270 million customers by the end of 2020, nearly 4 times more than JP Chase, the world's largest non-state-owned bank. Readers can select one of the 20 largest digital banks from the drop-down to see an animated comparison to JP Chase. The data have been normalized for readers to see how banks compare based on key customer metrics: deposits per customer, operating expense per customer, and revenue per customer. Equity support also fueled digital banks' growth. Funding increased nearly 280% since 2015. Among the 3 types of virtual banks, fintechs, companies that digitize services for credit and debt, rose in equity support every year since 2016. Investors betting on digital banks' continued growth added to the bank's market value. Some virtual banks have even higher market valuations than that of the largest traditional banks in their country. At the time of the analysis, Brazil's Nubank and Korea's KakaoBank both had market valuations greater than their country's largest incumbent bank. More than half of the largest virtual banks were profitable at the time this story ran in April 2022. Most of the profitable banks were backed by large tech conglomerates. These banks benefit from access to a wider customer base, brand recognition, client data, technology, and financial resources. Despite fast-growing adoption of online banking across the globe, digital banks face many hurdles. They struggle to reach primary bank account status, particularly in developed countries. Most customers use virtual banks as a secondary bank account, and traditional banks are catching up quickly in new technologies, customer convenience, service, and support. But virtual banks may continue to grow in the years ahead as they focus on aggressive customer acquisition, innovation, and cross-border expansion into emerging markets.